Wall Street greed hits Vanguard mutual fund company. Now, most of us know Vanguard. It's made its mark by charging low fees to investors. So I gotta say, I was disappointed to see that they are now looking at offering private investments to their clients. Private investments have become a booming business, not necessarily because investors are making a lot of money from them, but because the fees are far higher than regular investing, and Wall Street loves their higher fees. Vanguard, in particular, is looking at developing with Blackstone an investment that mixes public and private assets. The exact fee was not disclosed, but I do know it would be far higher than what they charge on their current mutual funds, especially when you talk about the index funds that they've really grown to be quite famous for. I'm sure the founder of Vanguard, Jack Bogle, who was big on low fees, will be turning over in his grave, obviously in disappointment here. Unfortunately, it's not just Vanguard though, as other mutual fund companies like Franklin Templeton and Fidelity are hiring fund managers to build private investment teams internationally. Franklin Templeton already has a private investment fund that charges a 1.25% management fee and then a 12.5% fee on all profits above a 5% return. Unfortunately, investors get sold these private investments with the hopes of higher returns and less volatility, but in reality, many times they don't realize that their money could be tied up for as long as 10 years. And again, I've seen this many times, unfortunately. They also don't understand that the reason for the low volatility is, well, the investments are not marked to market on their true value, so no one really knows what these private investments are worth. I do believe it is even more frightening that these will be allowed in 401k plans. Jamie Butmer, who is a chief investment officer at Creative Planning, which handles over $350 billion for individuals and 401ks, say with private equity how it is great for someone who wouldn't in their wildest dreams qualify to invest in private equity can now do so in their 401k. I gotta say, I couldn't disagree more, as many times there's a reason why they shouldn't qualify for private investments due to the lack of liquidity and the high risk of loss that many investors don't fully understand. Unfortunately, those who benefit from private equity are expecting to see fees increase by $1.5 trillion by 2033. This will come at a cost to investors, and I believe it will blow up with many investors losing more than they can handle. My advice, as always, is to stay away from those private investments. No matter how good your broker makes it sound, I don't think they're, again, great for the long term. I'm Chase Wilsey with Wilsey Asset Management. If you like these videos, be sure to give it a like or comment, and feel free to check out our other YouTube videos and weekly newsletter for the latest economic news, expert analysis, and market insights.